So let's cover where we're at right now, and then let's go back, right? Because, if anyone's looking to take a trade right now, maybe potentially we can kind of mark out some levels and see some things. And then, while we have those levels, we can kind of go back and see maybe what potentially we missed, what could we have done better, what is my thought process. Again, you guys don't have to trade like me. There's a million different ways out there to trade. We're all looking at the same charts. What we need to just do is make sure we're understanding of the position sizing that we're trading, understanding of, where some of these macro intraday levels are, and then potentially where could we put risk on the table to where we're going to be protected, right? Technical analysis, any which way you mark it up, whether you're using fibs or you're using moving averages, you're using your own supply and demand, you're using trend lines, MACD, RSI, it doesn't really matter. VWAP, it doesn't really matter. The main thing that matters is risk management, okay? Knowing how to take a loss, because we're going to take a lot of losses in trading. If you think that you're going to understand the strategy and you're never going to, take a loss because you have one particular way of trading because you've back tested it 100 times and it worked, 99 times, it's just not going to happen. Price action right now is trading at 18,195. We're closing below, or actually trading below, this 20 SMA, okay? We've got the power trending SMA, which being the 5. We've got that curling over. In this particular situation, I start to get a little cautious of the 20 SMA play short. Only reason being is that we've proven that the sellers had an opportunity this morning, okay? Off the open, the sellers had their opportunity. They sold off, they bounced, they tried once more, and then they got squeezed, okay? Now we're coming back down again to this 20 SMA. And of course, if we confirm this 20 SMA short, is it worth some opportunity? Is it worth, a trade? Maybe, right? Maybe. It's all dependent on how much size you're going to put on. Now, are you going to see me putting on 5 mini contracts in a particular play like this when the sellers already had their chance? Probably not. But would I be interested in a couple micros and a few micros? Sure, right? As long as I can manage my risk accordingly. So this current candle's range is only 12.5 points. Not that big of a range. Do the math. For every 1 micro contract you trade, you're going to lose $25 on this particular trade if it was wrong. Again, it still needs to set up. It still needs to confirm. I'm just giving a hypothetical situation here. What we're looking at, you've got a new high of day up here. So obviously any continuation, right? Because the long play already happened. Okay, the long play already happened. The long play happened on the reversal. Okay, and the reversal came at 9:45 in the morning. Okay, 9:45, 9:50 Eastern Standard Time. That's when the reversal happened. Why did the reversal happen there? You got extended selling where we put in that low, and then you got a green engulfing candle. Okay, the engulfing candle took out the prior red. You could have used the low of day as a max pain stop, and essentially you'd still be in this trade long. Okay, again, if you're a scalper, you would have made your money and you would have been out. But if you're just talking, hypothetically, this trade is still intact. So we're still in the same play. Great. Let's go on to the next trade. The next trade was the 20 SMA. Okay, the 20 SMA setup. This one, some of us took it, some of us scalped it, some of us stayed away from it. Okay, because if you notice, we had that big selling pressure, followed by a little bit of a bounce, got rejected the first time at the 20 SMA, sold off again, put in a higher low, chopped around for 10 minutes, and then we confirmed over. We still had that pre-market high of day at 18,210 sitting up there. So again, it was making traders a little cautious to want to get long because, you were feeling like potentially we were going to get stopped out, or potentially, it wasn't going to confirm or follow through or any of that, right? That's all great. But when you break that thinking process down, now you're getting into a thought process of trying to outsmart the market. Okay, you're trying to be smarter than price, and nobody is smarter than price. Nobody is smarter than what the candlesticks are actually doing. Okay, we can have a bunch of theories, we can have a bunch of ideas, we can have opinions. Those are all great. We got 1 minute before this candle closes here below the 20 SMA. we can have those thoughts, right? We can have that bias, but it changes nothing. If this play confirms, which it did confirm, okay, it did confirm here. Once that confirms, if you're trading the 20 SMA, you got to be in on this trade, okay? The range on the reason why candle was 25 points. So you got to do the math. You got to do the math. Getting a nice washout here. Again, be cautious. Before I continue with this play here, I want to show you guys why I'm saying to be cautious. Notice when we put in the first leg down and then we bounced, I want to show you. Let me put a trend line here, right? Look at the high wick. Look at the high wick where we got rejected and put in that higher low. Where are we trading to right now? That same exact spot. Previous resistance, new support. Now, does that mean we're not going to flush? No, it does not. We can completely flush. If we flush and if you get into this trade right now, you have to have expectations of taking profits into this 200-day moving average, sitting down here at around 18,158, 18,160. Okay? If you're thinking about it from a scalper's mentality, guys, you got to get in, get your 5, 10, 15 points and get the hell out. Okay? So the low price of this reason why 20 SMA play is sitting at 18,188. We're currently trading as low as 180. Again, slippage, fill time, more than likely you're probably in this thing. If you are, you're probably only up 2 or 3 points, right? With the potential that this thing bounces. So if it bounces, again, you got to use technical analysis, supply and demand as your stop. Your true stop is not going to be until 18,202. That's over your reason why candle, okay? Or any close over this 5 or 20 period moving average. It's very simple, okay? If you're not okay with that amount of risk, you shouldn't be in the trade. It's as simple as that, right? It's as simple as that. If you're going to take this trade, but you don't want to lose, what is this? 14, 15, 16, 17 points, don't take the trade, right? If you're looking to get in this trade and make 5 points on a scalp and it bounces on you 10, 15 points and you're going to cry and complain about it, don't take the trade, right? Because a lot of times we get into these 20 SMA plays, we get into the first hour high or low breaks, we get into the previous day high or low breaks, and as soon as we get in, it pulls back, and then it goes sideways, and then our emotions start to think, right? It's once you're in the trade, it's black or white, right? Trading as a whole is not black or white. There's different variables. There's a lot of gray area, but once you're in the trade, once you have physically clicked buy or sell, the trade becomes very black or white. You need a technical reason to take profit, which could be reason why, 14-point range. It could be half of the range of the reason why, 7 points, or it can be the current 5-minute ATR, 18 points. Or it can be half of the 5-minute ATR, 18 points of 8 or 9 points, right? So again, those are your reasons why to take profits, your reasons why to stop out of this trade. It's working. Again, it's working. Your reasons why to stop out of this trade is technical damage over your reason why, any closure, or closure over your 5 or 20 SMA, because those are the two supports that I have on my system, on my platform right now, okay? If the 5 SMA is our power trend, well, then you can choose to get out of this trade if we close back over the 5 SMA. If you want to give it a max pain, you can definitely use a 20 SMA, and that's your max pain, any closure over the 20 SMA, okay? Current low price on this candle so far has tagged 18,178 from should have been an entry of 18,188. Okay, so 10 points so far, 10 points. Now, again, if you're one of those people who is scalping these mini contracts, guys, 5, 6, 7, 8 points, you got to be out. We're down 15 points, 16 points now. Do we see how this works, right? If we lose a level of demand, price tries to push down into the next area of demand. Now, again, sometimes it's going to touch this 200 SMA perfectly, like it's picture perfect. Other times it's going to stop shy, okay? Other times it's going to come close, right? So we always have to be thinking, if I get into this trade, I need to be thinking about taking profits into the next area of demand, okay? Or if you're going long, into the next area of supply, okay? And again, for those traders who are looking to get in on this trade and take a scalp, 5, 6, 7 points, guess what? You guys traded 1, 2, 3 mini contracts. You guys just made some great money. Those of you guys who are trading 1 or 2 micros and it went down, by the time you got in, it only went down 5 points, and you're looking at the P&L and it's only up $10, $15, $20. and you're hoping for more and you're waiting for more, and this snaps against you and goes the other way and stops you out, take your medicine. It is what it is. Because if you're trading smaller size, okay, you're obviously looking for a little bit of a bigger move, at least, right? Again, the range on this was only 14 points. The range on this was 14 points. So technically, from 18,188 to a low price of 18,171 is how many points, guys? How many points? From 88 to 71 is more than 14 points. So technically speaking, I don't care if you're going to tell me, right? And this is what I've heard in the past. Well, by the time I hit sell and I got filled, I was already filled 5 points below. And it only went down another 8 points, and now it's snapping back against me. I didn't make the 14 points. You didn't make the 14 points. That doesn't mean that the chart didn't give you 14 points. The chart has given you a 1-to-1. Make sense? So the chart has given you a 1-to-1. Just because you were slow to the trigger or you got a bad fill time by the prop firms does not mean that it didn't give you 14 points. So technically speaking, if you're a scalper, you're looking for half the range, 7 points, you got it. If you're playing true to the 14 points, you should have been out and you should have got it. If you're playing super small and you're trading from supply to supply, demand to demand, then yes, you're waiting for it to put another low into this 200. Does that make sense? I just want to know if that makes sense for everyone. The way that I just broke that down and explained it. So you guys can put it in the gold members live trading chat. I don't know if you guys can see it or not. There, you can put it somewhere. But just let me know that that kind of thought process makes sense, right? Okay, perfect. So as long as that makes sense, right? As long as that makes sense, because again, when you're realistically thinking about it, you know, I want you guys to really think about this for a second. How many times have you guys seen a play? It sets up, it confirms, maybe you were a little hesitant, maybe it moved fast, because again, this NASDAQ, it's the wild, wild west out here. This thing's gonna move fast. Maybe, you know, the prop firm slipped you, didn't fill you right, filled you, you know, you were looking to get in at, what was the price here? You were looking to get in at 88, and it filled you, you know, down here at 82, right? So great. So they slipped you 6 points. What are we going to do? Are we going to cry about it? No. You're in the move. You're in the move. You have the same stop loss whether you're in 5 points late or you're in right on the T, right? The point I'm trying to make is that if you're looking at the situation, it's going to come down to what your position size is where you're looking to take profits, okay? I'm going to break it down into 3 groups, okay? I'll go over it one more time. 3 groups. Your aggressive scalpers, meaning you're trading +1 mini contract between 1 and 5, right? You guys are looking for these plays to confirm, and you're looking to make 4, 5, 6 points quickly, okay? And or half of the range quickly of the reason why, and or half of the 5-minute ATR quickly, okay? Quickly. We cannot let this thing go down 5 points and snap back 20 points, okay? It needs to happen fast, and if it doesn't happen fast, get the hell out. Second, you're trading sub mini contracts, meaning you're in the micro side of things. 5 micros, 4 micros, 3 micros. You guys might be looking for something close to that reason why range. If the range on this short setup was 14 points, then maybe we're looking for 10, 11, 12, 13, 14, right? Makes sense? Maybe we're looking for something close to that 5-minute ATR, okay? Or you're going to make it very cut, clean, and dry and say, I'm going to trade 5 micro contracts, but I'm going to take half of the reason why 7 points, and I'm going to get in and I'm going to get the hell out, regardless of where you're getting filled at. Because again, the chart doesn't know where you got filled at. It doesn't know where Apex filled you at. It doesn't know when you click the button. It doesn't know where you put your limit order, right? It doesn't know that. The market doesn't care. The market doesn't care. This market gave everyone a 1-to-1 on the reason why. 14 points. Whether you decided to sell or not is on you. Now, a lot of times we get into these trades, it goes very, very quickly, starts to wake up, and now, you know, it gave us 14 points, but now it's only trading, you know, 8 points, 9 points, 10 points. You got a clear decision to make. Either you're going to let it go the whole way and you're going to get stopped out, or when the market, because sometimes the market gives you that second opportunity to get the hell out of the trade. If it gives you that second opportunity to get out of the trade, you got to get out of the trade. Okay. The third group is people who are trading 1 micro. Okay. 1 or 2 micros. If you guys are trading 1 or 2 micros, I get it. 7 points, you're going to make 15 bucks. It's not a lot of money, right? It's not a lot of money. I get it. So maybe we're looking for that bigger move. Maybe we're looking for the bigger move. Then you would be looking for us to get somewhere close to this 200 SMA. But if you see it start to stall, like it's stalling right now, and we get back over the 5 SMA, you got to get out of the trade. Okay. You got to get out of trade because the 5 SMA is going to be your power trend. So if we got the 5 SMA that crossed below the 20, you got your power trend going down. We still haven't even really tested the 5 SMA. We haven't closed over the 5 SMA. Pressure still to the downside, but previous candle, a little bit of a reversal candle. So the previous candle at 9 a.m. Pacific Standard Time, so that's, you know, 10, 11, 12, that's noon, right? This candle here is a reversal candlestick and or pause candlestick. So a pause candlestick means that, you know, imagine running a marathon and you're at mile 12 and you got all those people on the side of the road and they're handing out Gatorade and handing out water. That's like the jogger, the runner. He pulls over, grabs that cup of Gatorade, drinks it, and then continues with the marathon, right? And or he taps out. He says, give me my Gatorade, I'm done, right? I'm done. And then the market's going to reverse. So that's what these type of candles signify. This pause candle, it's a hammer candle off of an extended move down. 5, 10, 15, 20, 25 minutes to the downside, pause. So market's resting here, but if you also go to the left, where are we resting at? In this previous range, let me take this crap off. In this previous range of the previous resistance, right? If I draw this box here, look at this price action. Tagged it, got rejected, came back down, tagged it, and then we broke through on 20 play. Look at where we came back down now, right? I want you guys to also notice something. 5:30 a.m. So 8:30 a.m. in the morning Pacific Standard Time, or excuse me, Eastern Time, 5:30 my time. We always get that. We always get that move, right? At 5:30, we always get some type of news, some type of number, some type of something. Look at the 5:30 a.m. candle. Boom, big explosion. But look at where pre-market was trading at prior to 5:30. I drag my box out across. Resistance. Look at where this move is back down to, right? So at 5:30, when news drops, when numbers drop, whatever the heck drops, right? I think today was jobs numbers or something. We get the pop. We broke down through that. We did put it in a 20 play short. Okay, we put in that low of day. Dead cat bounce, lower high, breakthrough first hour highs, put in that new high. Now we've pulled back. And look at where we pulled back to. This is not a coincidence. It's not a coincidence. People try to say that, you know, the market is out to get you, it's out to trick you, it's out to do this and that, market maker this, that, whatever, blah, 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 bunch of bullshit. Guys, I've been doing this for 10 years. I've traded with people. The person who taught me has been in this business for over 30 years now. Okay, old time guy. This is the most orderly thing you're going to see in your life, even when you think that it's not. The only thing that's not orderly is what's going on in between your ears, right? That's your brain. Right? What's not orderly is that, because again, we're all human, right? We're not smart. We're stupid. Okay, we're stupid. So that tends to make you think irrational. It makes you think, you know, well, you know, market's chopping, the market's doing exactly what it's supposed to do right now. Well, what's that? Well, we had an area of resistance in pre-market. We broke through it, and then we tried to hold it. 200 SMA, we tried to hold the pre-market highs. Guess what? They couldn't do it. So they flushed. Makes sense, right? Couldn't hold a prior resistance as new support. We flushed. So we got a bounce. Where did we get the bounce back into? Pre-market highs. Pre-market highs prior to the 530 numbers. And guess what happens? They tried to get us over and we couldn't get it. They sold it right back down. But the buyers were strong enough to step back in and ramp this up. So now where are we really looking for to take a trade this morning? This 20 SMA play. This 20 SMA play. There was 30 points here. I think someone mentioned this morning, 30 points between this 20 SMA play high and the high of day here, or this pre-market high level, 30 points. And by golly, it traded all the way up there. Orderly. Is any of this looks like it's trying to trick you? Or is it your brain? Is it your emotions? Is it your personal bias that is saying, oh no, don't take this trade because what if? Guys, this is trading. There's going to be a million what ifs. You get really good at one thing in this business, you're going to go a long ways. Risk management. Yeah, boring. Yeah, I know. I've heard it a million times. All trading is managing risk. That's all we're doing. We're going to lose. We're going to lose a lot. Let's become very good at losing. Let's get happy about losing so we can move on to the next fucking trade, right? Because how many of you guys, even if you've been in here for a day, you've been in here for a week, you've been in here for a month or 5 months, or, you know, some people 4 years, guys, there's always another winning trade. So what the hell are we going to get upset about if one particular trade doesn't work? You want to know why we get upset when we lose? Is because we lost more than we wanted to. They skinned our ass too much, and we did not want to lose that. Whose fault is that? The market's fault, or is that your fault for trading too big a size that you couldn't handle emotionally? Right? So when you think about it in that kind of perspective, and you think about it in that kind of terminology, this shit becomes very, very easy. All you need is money to trade. Now with this, you know, fucking gold rush of the wild west of these prop firms, where you can pay $20, right, or $50 or $30 to get an evaluation and prove that you can trade and take a payout. I don't give a shit if the prop firms are making you guys trade on demo. I don't care. Are they paying or not? Yes, they pay. So does it really matter if you're trading in live markets or you're trading demo funny money against some other stupid idiot who's trading a prop firm? No. At the end of the day, this is about getting paid. Show that you got skills, get paid, right? So when you think about it, you can get started in this business for next to nothing, right? Next to nothing. When I started, they didn't have all of this prop firm bozo stuff. You had to put up your own hard cash, and guess what? More than likely, you got blown up. You lost 1,000 here, lost 5,000 there, lost 10,000 here, lost another 500 here. Hit a great trade, think that you're a superstar, lost it all again, right? Think about if every time, for those of you guys who trade prop, think about every time you blew up an account, you lost $2,500. How many accounts have you blown up? 5? You lost 10,000. 12,000. 10? You know, 20, 30, 40 accounts? In the real world, because that's where I come from. I come from the real world where you have to put up your own hard cash to trade. In the real world, if you're blowing up accounts, that means you're losing at least $2,000, $2,000, $3,000. If you've lost 10 accounts, you've lost $20,000. If you've lost 20 accounts, you've lost close to $40,000. If you don't have $40,000 to put in the market right now, why the hell are you trying to, you know, push the envelope? Make sense? So again, get really good with losing, but get even better at managing risk. The market is going to do orderly shit even when it's not doing orderly stuff. Meaning, even when it seems like it's choppy, I can guarantee you we can all pull up the chart and we can find some reason why the hell we're choppy. Also, I mentioned in the video I posted yesterday, guys, we're going in through a period of distribution. So about 3 days ago, we closed over our daily 50-day moving average on the NASDAQ 100. That's a big spot, okay? You know, for those of you guys who maybe have not been around for a while, whoever controls the 50-day moving average is going to control the price action. Meaning that, yes, you can have down days or red moves over the 50-day moving average, but what it means is the bulls can step in at any time and take it back up over a previous day high, okay? Same thing when you lose the 50-day moving average. You can have green moves and green days, but typically the sellers can step in at any time and move this market lower. Okay, so we got to be a little bit more cautious when we're below the 50-day moving average going long. We got to be a little bit more cautious shorting when we're over the 50-day moving average. Think about all the suckers, right, who maybe are trading a couple contracts and they think, I'm the smartest man in the world, let me just get short here, this market's pulling back, no way the market can keep going. Reverse, 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 right? And I see this happen a lot, more so on people who trade stocks and options, you know, because when you're trading an option, it's not really moving. You're trading premium, it's not moving one-to-one like this. So a lot of times traders will get in on this short position here. They won't really make that much money on their options contracts, and then they're fucking holding this thing. And now they're like trapped, and they're like wondering, what the hell am I supposed to do now? And they're hoping that this thing comes back down, instead of realizing that, hey, we're still trading over the daily 50-day moving average. Bulls can step in at any time and snap this. When I get green, I better get the hell out, right? Until we confirm that new low. Make sense? So you got to look at it in that type of scenario and perspective. So Charlie, do we trade the first few candles of the open? Yeah, I mean, I do. It's risky though. It's risky. So if you're not ready to lose off the open 20-30 points in the blink of an eye, don't trade it, right? Don't trade it. If you're a type of trader who, you know, you're just looking for that first initial pop and you're going to get in and get the hell out, and you have enough, you know, you have enough self-control to stop yourself out, right? To stop yourself out, then when you get green, then by all means go for it, because some of the best moves that I've caught have been within the first 5 to 10, 15 minutes of the market open. Some of the best moves. You want to know where I've lost some of these prop firm accounts as well? Is within the first 15 minutes of the market. You know, I thought I had all the levels in play. I've gotten wicked in, and as soon as I get top tick, this thing has retraced on me. I'm in 5 mini contracts trying to be a hero, and guess what? I've lost the accounts. It's the name of the game. You know, did I really lose the account, or did I lose $25 that it cost me to pay for that stupid account? Right? Think about it. What, like, it's all relative, right? It's all relative. So if you've lost prop firm accounts by trading big size and kind of doing those things, guys, it's nothing, right? It's nothing. Today I was in on an AMD play, an AMD trade on the option side of things. 10 contracts cost me like $2,300. Guys, I didn't make that much money. I made $300. But if I would have lost, guess what? I would have lost $300. How many prop firm accounts is $300 at $20? Right? So it's all relative. You know, you can blow up one account and think about it as, oh, I lost one account, but it's only $20. That was a $20 trade. That's all it is. Get so upset about it, right? Don't get so upset about it. Yeah, Charlie, I really wouldn't trade the open. I really wouldn't trade that first 1 to 2 candles after the bell until you've build a cushion, build a padding. You've got some plays that you know, for you, they work more than they don't. Right? For you, they work more than they don't. And you're comfortable. You know, don't just take it just because everyone else is taking it. Don't just take it because, oh man, look at this candle. It was 40, 50 points. I could have made all this money. Forget about it. You're always going to get another move. You're always going to get another move. So make sure you stay patient. You know, I personally wouldn't, you know, I used to recommend a lot, like with the rise of futures and everything, and the rise of prop firms, many of you guys, 90% of this room now has all turned into futures traders. But at one point in time, 3-4 years ago, almost 5 years ago, this room was all options players. I used to tell the newer options players, guys, sit the hell out of the first 30 minutes of the market. Because if the stock's going to go higher, right, and in this case, futures, if the market's going to go higher or lower, it's got to confirm that first hour higher low. There is no ifs, ands, or buts about it. In order for a stock to move higher, not move up, because there's a difference between a stock going up and going higher. There's a difference between a stock going down and moving lower, okay? In order for a stock to go higher, it's got to take out first hour highs. It's got to take out previous day's highs. or else you're just inside the range of yesterday. Okay, so that becomes a range. So if you're long on a particular setup, let's say on a 5-minute time frame, but we're not outside the first hour highs, or we're not outside the previous day highs, where do you think we need to be out of that trade by? Right? That's supply. Why? Because the stock can't go higher until we take out one of those levels. Okay, it's just range. So I really used to add that emphasis onto options traders that if you're going to take these trades, you don't have to trade the first 30 minutes of the market. You might actually save yourself a whole lot of headache by not trading the first 30 minutes of the market. But here's the kicker. Here's the kicker. When you get around in a group and you get in a community and you get around other people who are trading that first 30 minutes of the market, and there was a killer move, and you're sitting on your hands and someone else is posting gains that they made $300, $900, $500 in the first 20 minutes, that creates FOMO. So I'm going to be loud and clear and very blunt. Okay? So if you don't like bad words, cover your ears. Do not give a fuck about what anyone else is doing. No one else is putting food on your table. No one else is giving you money. No one else is paying you to be here. No one else cares if you win or lose. We're supportive, but at the end of the day, do you think that the next man in here is going to lose any sleep if you lost your account today? No, they're not. So why do you care, or why should you care what anyone else is doing? At the end of the day, you need to be a selfish son of a bitch, okay? Selfish. The only person that matters is you, and the only person that is going to put food on your table and money in your pocket is you. Which is why I've always had a problem with live trading, okay? Not that I'm saying I won't do it. Not saying that I don't like sitting here talking with you folks, but I have a problem with live trading. I have a problem with other communities and other discords that post a bunch of price levels, post a bunch of levels and quote unquote signals, because what you get is a lot of copycatters. In copycatters, if you don't understand my emotions and you don't understand my risk management and you don't understand what I'm looking to execute on, you're always going to be late and you're going to fucking lose every time. You're going to get lucky and win, but you're going to lose more than you're not. You have to put in the work. You have to know what you're looking for. You have to know where your take profits are. You have to be understanding of the system that we are all trading. You cannot sit here and watch the screens and think that you're going to tail a trade just because I say, hey guys, we're breaking we're breaking high of day. You have no idea where what's going on, right? You have to have some type of outline of what's going on here, some type of system. Everyone's pockets are different, meaning everyone's account sizes are different. Some of you guys have one prop firm account. Some of you guys are trading a personal account. Some of you guys are trading 5 evaluations while other people are trading 10 funded accounts. Everyone's risk management and tolerance is going to be different, guys. So forget about everyone else. Worry about yourself and what you can control. What you can control is the amount of risk that you're putting on the table. And again, the live trading we used to do a lot, almost every single day. People used to talk, they used to share their ideas, they used to do all that. What I noticed, okay, which is why personally I have pulled back on it. Like I will give in the futures channel, I will give the like the play-by-plays, what I'm thinking on and stuff, because it creates conversation. It causes people to talk, to text, right? To actually write down what they're looking at or what they did or whatever. That extra second that it's taking you to type that out makes you think a little bit more clearly. When you're sitting here watching the screen and you're hearing someone say, I'm long, I'm short, I'm this, I'm that, it creates a whole fucking clusterfuck of everyone's just spinning their wheels in the dirt. And it creates a lot of FOMO. Okay, it creates a lot of FOMO. So although it's good to see, what's on the screen, what are they looking at? That's good. At the end of the day, ultimately, never take someone else's advice if it doesn't align with what you're seeing. Make sense? So if I say that I want this bounce here, because someone give me the benefit of the doubt here. Could we say that this is a Big's bottom here? Right? And so for those of you guys who don't know what a Big's bottom is, you don't know what I'm talking about. Can we say that this is a potential bounce play here? Like the bounce play that happened about 25 minutes ago. Can we say that someone is long here? Okay, can we say that? Okay, so if we can say that that's a long play, let's say, for example, I'm telling you guys, I'm long here. And someone's like kind of like, well, what the hell? Why is he long? Market's pulling back. Let me get long. And then they click buy now. Guess what happens? Do they understand the severity of the 20 SMA being right here ahead? Right? So where I could be looking to take profits, you're getting long because you hear everyone else saying that, oh, this is a Big's bottom. We're bouncing off pre-market highs. You know, we're bouncing off of that previous rejection spot from earlier in the morning. And guess what happens? What happens if this gets rejected and turns back around? Now you're kind of like stuck wondering like, well, why is everyone else making money, but I can't seem to find it, right? So this decision to go long here off this reversal, off this Big's bottom, off this demand zone, off this, you know, zone of the 200 down here, has to be taken in the blink of an eye. It has to be taken because you've seen this pattern before, because you've traded this pattern before. Because you know where your stop's at. You know where your potential profit taking is at, right? So I like to trade live with everyone when everyone has a good understanding. And I don't know what is going on YouTube, but excuse me. But for whatever reason, views on futures trading and this, that, and the other is like through the roof. So there's been quite a handful of newer people in here that have joined recently, and almost to the point where I need to kind of pull that off, because I don't even feel comfortable right now having the influx of people come in here if they don't know what we're doing, right? Like imagine like if we've got, you know, a dozen guys in here, for the most part, a lot of us are trading and watching the same stocks in the morning. We know what we're looking for, but then you got maybe 6 people who have no idea what you're looking for in the morning. It creates a little bit of a confusion there. So again, I need to, if you're new to this room, -1 week, right? Make sure you guys send me a DM. Get with me. What do you trade? What's your position size? Are you prop or are you personal? That way we can get a baseline of what your knowledge is, what you're looking to do, what you're looking to focus on, what you're looking to get better at, right? And also make sure you're watching some of these videos, right? Like I'll drop these random training videos that are different from YouTube. Like if you guys have followed me through YouTube, you guys have seen a lot of the stuff that I've put on YouTube, but some of this stuff goes a little bit more in depth, more of how I'm talking to you right now, as far as what my thought process is, this, that, and the other. So with that being said, if you haven't watched any of that stuff, if you haven't, you know, scanned around the room, if you haven't taken trades yet, right? That's another thing. The only way we're going to learn is by taking trades, right? So we have to take trades to see what are we doing wrong, not only personally, but technically, right? What are we doing wrong? What can we fix? If you come to me and you say, I want to learn how to futures trade, I just started, can you show me your screen? What's that going to do? Have you taken any trades? No. Did you take, 20 SMA plays? How many have you taken, and what's your win rate on them? Well, I haven't taken any of them. Then how the heck do we know what we need to fix? We've got to know what the issue is before we can fix it, right? A lot of times it's trading too big a size. I know that already. And a lot of times it's trying to short when the market's uptrending, and it's trying to go long, when the market is pulling back. Yeah, but most definitely, the thing is that we've got to take the trades. We've got to trust the technicals, right? Because if you're not going to trust the 20 SMA play, if you're not going to trust the confirmation over first hour highs or lows, if you're not going to trust, bouncing, off of a demand zone here using a previous 5-minute stop as your max pain, if you're not going to trust that and you're going to constantly, go have a battle inside your own head as far as maybe I don't take this, maybe it goes, maybe that, then why do you have a system? Why do you have a strategy? A strategy is meant to take all of that guesswork out. Because once you have the strategy, the only thing that needs to be done on your end is manage how many contracts you're trading and clicking the sell button. That's it. Or the buy button. That's it. Everything else you're going to follow to a T. And you cannot be scared to lose. Like, you can't. Like, it's just not possible. Like, if you're always in constant protection mode of trying to avoid a loss, you're going to take more losses. Okay? It is what it is. Get through that. And again, there's nothing that, anyone can do for you as far as making you get over that other than yourself. You have to work on it, right? It took me a long time, guys, like a long time. And I designed this community in this room so it doesn't take a long time, right? Just learn from my mistakes. I'm an idiot. Like, I'm not, I didn't go to MIT for this kind of crap. You know what I'm saying? I learned from just basically School of Hard Knocks, just, getting whacked in the head. And when you get whacked in the head enough, you start to wise up, right? You start to wise up. It's like the bully in school, no one stands up to him. No one stands up to him. No one stands up to him until one day the kid in the back of the bus with the glasses on stands up to him, hits him right in the face. And he's never been hit in the face before. And all of a sudden he stops, right? So again, that's the real way that you learn, but it's very, very unfortunate that it takes traders to lose a ton of money and a lot of time before they wise up. Okay. Let's just take that out of the equation from the start by doing the right things and accepting loss and accepting risk and trusting the system and trusting the technicals. And you're going to cut the learning curve in like tremendously. Like, there will be next to no learning curve. You can just get on the field and start playing. Like, again, I've heard it in here. I've heard it on social media. Market tuition this, market tuition that. Fuck that. When it comes to money, I'm not trying to lose anything. I don't want to sit here and pay market tuition for 3 years to learn how to trade. That's ridiculous. Does that mean I'm not going to lose trades? Of course not. But I'm not going to sit here. I'll just give you an example. I'm not going to sit here, put $25,000 into account, lose it all, trying to learn. I'm not doing that. And I don't think anyone else should do that as well. Now we can go from 25,000 to 23,000, back up to 26, down to 25, to 28, down to 26. We can have that steady equity curve where we're taking some losses, but we're also moving forward. But as far as just putting a lump sum of cash into the market and saying, oh, this is my market tuition, that's foolish. We got to get out of that mindset right now. Where we're at in the price right now is we came off of this big bottom bounce here, off of this pre-market high prior to the jobs numbers or whatever that came out this morning at 5:30 before the market. We came down into that area. We got this reversal candlestick. We bounced. Okay. We bounced. We got back over the 5 SMA and we pushed right into the zone of the 20 SMA. Okay. Which is also first hour highs. Makes sense. So that 18,210 level, just sitting right here above that level where we kind of pushed in, we kind of, fell shy of it 5-10 points. We pushed into supply. Now we're kind of rolling over. Where do you think my next long trade would be? My next long trade is not going to come until we get over the 20 SMA and over this first hour high. I need to get a candle close over that. I need us to go sideways, pull back, or confirm the new high. And then from there, I want to take those profits into the high of day 18,237. Does that mean I need to wait for 18,237 to get touched before I take profits? No, I want to take profits into that area. Make sense? If we break down, okay, we come back down into this zone down here, this 200, doesn't mean that I'm trying to short here. I'm not trying to guess that we're gonna come all the way down here and take a flyer. I would need to see us lose the 200, consolidate, bounce, get rejected, do something, and then take out the new low below the 200, and then I would start trying to target the first hour lows down here, 18,106. Anything other than that, this is all range. It's all range. We're back with inside the first hour range. Makes sense? So sit on your hands and just wait. Exactly. So Nate makes a good point, guys. If you guys read what Nate just said. In the beginning, okay, in the beginning, and I still do it. I still do it a lot. But it's back testing, guys. Like each and every single one of you guys here today, regardless if you work a 9 to 5, regardless if you do this full time, it doesn't matter. Regardless if you made $1,000 today or you lost $1,000 today. Every single day, you need to go back and back test the plays and the setups that you take. Okay, the setups that you take. So if it's a 20 SMA setup, if it's a first hour high or low break, if it's a Biggs bottom bouncer or a Biggs topper, you guys need to go through and back test mentally. Okay, I see what he means by extended selling. We hit demand, pods candle. If I use that bottom wick as a stop and I got in on a confirmation, how much am I risking? Okay, 15 points. Great. Where would I think about taking profits? Maybe the 5, maybe the 20. Okay, great. Okay, that would have worked out. Cool. And you do that over and over. 20 SMA play. I remember today I didn't want to take this. I'm talking out loud here in hypothetical scenarios because I heard some people say that they didn't want to take this 20 SMA play long today. But if you get to this and you're like, okay, well, I didn't really want to take this because I felt the market was chopping and we already pulled back. Well, I should have taken it because I would have made money. What would my stop have been? 25 points. Okay, great. If I traded X amount of contracts, how much would I have lost? Okay, great. Where should I have taken profits? Well, maybe this, high of day or first hour highs. Okay, great. What did it do? Go through that mentally over and over and over. If you need to take notes, take notes. Because the more times you do that, the more times it gets ingrained in your brain. When this is setting up in real time, when the markets are live, it's like second nature, guys. It's second nature. Today, Nate called out, right? And again, thank you for that. Nate called out AMD, said, would you take this setup, right? Would you take this AMD 5-minute 20 SMA play setup? At the time, I was not even looking at AMD. It was like 3 candles past the 20 SMA setup. I looked at my risk. How much are the contracts? How much do I want to play? Potentially, what would I be looking for here? And let's go for it. Let's ride. If the play's active, it's active. Let's ride. Let's take it. I've seen it enough. This is my setup. Why not be in the trade, right? Got in the trade, made a cup of coffee on it, held a runner, whatever. Done deal, right? That is what it is. So, because it's when you see them so much, you take these plays so much, it becomes second nature. Becomes second nature. Let me take this junk off my screen, actually. Let me take this off. So if I go to the daily chart, guys, I'll take everything off. Guys, look at the daily chart. Bullish or bearish? Based on the last 4 days. Bullish or bearish? That's another thing. If you're looking for shorts, look at the daily chart. What's the daily chart doing? We can't even get bearish until we lose a previous day low. Because remember, when does stocks move lower? Not go down, move lower when we take out a previous day low. When do stocks go higher? When we take out a previous day high. Where are we at now? We're in the same range we've been in for the past 4 days. So why are we getting these little up moves that kind of go and then it pulls back? And then we get a little down move and then it bounces. Why? Distribution. Start understanding what distribution is. Distribution is a period of consolidation. Distribution happens normally once a month. Okay, normally once a month it happens. It can last anywhere between 3 days and a week. Normally 3 and 7 days, right? The longer you're in distribution, the bigger the move is coming out. You never know what side the move's going to come out of, but you can kind of have a little bit of a bias based on if we're trading at the bottom of the range or the top of the range. So in this particular scenario, we're trading at the top of the range, right? The top of the range on the daily chart. So if we really start to take out 18,270s, which is about 70 points away, guys, we can put in a leg up. We can put in a leg up. And that leg up with trying to be targeting the previous distribution when we were in it for 1, 2, 3, 4, 5, 6, 7 days. Distribution is when you go down, you come back up. You go down, you come back up. You go down, you come back up, but you're not going anywhere, right? It's not like this. Like this is a downward selling pressure, right? I want to, if you guys are looking at the screen, this is selling pressure. When we lost that 50-day moving average, we had an extended selling. Then we stopped. Then you're going up, 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 up. Do you notice how every day is taking out, whether it closes or it just wicked above it, is taking out a previous day high? Boom, boom. This is an uptrend, short-term uptrend, but it's an uptrend. This is a downtrend. Notice the down days. Lower than previous day, lower than previous day, lower than previous day, lower than previous day, lower than previous day. Uh-oh, guess what happened on 4/22? No lower than previous day. What could that be telling us? Hey guys, boom, short-term change in trend. When 4/22 comes to a close, we can tell ourselves one of two things. If we bounce and lose the previous day low, we're short again. If we don't, and we have a green candle taking out previous candle, right? Green taking out previous green, or red, we're going higher. Higher, 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 higher. It's not rocket science, guys. But if you notice the last 3 or 4 days, we had that first close over the 50-day moving average. Then we took it out, right? We went higher and then pulled back. Then we went lower, but didn't close below it. And now today we're back in the middle of the range. So we're getting a lot of price that's just up and down, up and down, up and down. The big move is yet to come. So if you're finding yourselves not like, wow, how come I'm not really, finding 4, 5, 6 plays a day? Why am I not making tremendous amounts of money? How come this is, choppy? There's a big reason why. There's a big reason why. When we get this move out, right, of this range, you guys want to make your week's P&L in that one day. Or you can make your, let me just say that. I'm not going to say to try to, but you can make a week's worth, hell, a month's worth of P&L on that one move, okay? But you got to wait, though. You got to wait. Not every day is a trading day. Again, we have the luxury of trading the futures that, we can scalp. We can scalp 5 points here, 10 points there. We can snag that on the NASDAQ all day long, but are we really getting moves? No, we're not really getting a move. We're not really getting a trend, right? Not getting expansion. Expansion is the better word. But when we do, you want to take part in it. You don't want to be hesitant, guys. Like, here's what I've seen happen. We start breaking out of this distribution, right? A 3-4 day distribution. We start breaking out and people are fucking hesitant to go long. It's like, we just sat there for 4 days, right? Again, we sat there for 4 days. We went up, down, up, down, up, down. Now we're breaking out. Now we're hesitant to go long. I don't trust it. You don't trust it? I'm just talking in theory here, but it's happened and you guys know it's happened, right? Or we start losing the previous day low below this 5 SMA and we start going short and people are like, no, I thought the market was going higher, and then they don't want to go short. Guys, the range is broken. It's broken. Like, the market doesn't care what you thought it was doing. Oh yeah. Oh yeah. For swing traders, hell yeah. So again, I used to teach for swing traders the 20 SMA, right? And the 50 and the 200 for swing traders on the option side of things. Guys, I mean, look at the last time we closed underneath that 20 SMA on the future side of things, right? The low price was sitting at 18,120, and we confirmed that. We went from 18,120 all the way down to 17,113. I mean, we're talking about 1,000-point move in 1, 2, 3, 4, 5. Now we're on a 1, 2, 3, 4. This is still in a holding pattern. You should still be long if you were swinging, theoretically speaking, on the NASDAQ, right? So if you're trading Qs, let's say, for example, you're trading options, you're trading the Qs, you're still technically in a 1, 2, 3, 4 day swing here. Entry price was over. I can just give you a better example on the Qs chart. So for example, you're swinging over under. We got the gap over the 20 SMA. That high price was $436.50, right? Now we're 4 days distribution and then we're going sideways. This is a beautiful chart setup. Like I'm licking my chops for 441.97. Let's call it 442. 442 broken on the Qs, all over that. But anyways, if you got in at 436.50 and we've traded up to 441, guys, you've already made 5 points on this move. 5 points. That's an insane move, right? It's an insane move. Easy swing trading tactic. Easy swing trading tactic. Tesla, on the other hand, hasn't done absolutely dog shit since it gapped up on earnings. Just pulled back. But I mean, you can just go through charts and see Nvidia reclaimed its 20-day moving average on the 2nd at a price of $862, and it's traded up to 922 in 2 days. Insane. The last time it lost a 20-day moving average, price was sitting at 875, and it flushed to 750. 1, 2, 3, 4, 5 days with inside the same trading week, give or take 100 points. Imagine if you had one contract and you made 100 points. Just saying. So looking at the daily chart, and what are we doing as far as, are we over under the 20, over under the 50 on the daily chart? That's going to kind of tell you for your intraday trading and scalping where you should more be leaning your bias to. Not opposed to going the opposite way, but where should your bias be leaning to? Okay. And this chart does look beautiful. Again, I'm not saying that it's going to break out. Like if I knew for certain, I'd go max size and just sit in this thing until we took out highs. I'd love to say that. But the longer the bulls can hold the 5-day moving average and stay over the 50-day moving average on a daily time frame, the better. Okay, the better it looks to break out to the long side. Things can change in a snap of a finger tomorrow, right? We can give up the bottom of the range and lose this area and flush tomorrow. We can do that as well. But I'm just saying, right now, bulls are going to have the benefit of the doubt. But I hope some of you guys got a little bit of insight. Again, I kind of went a little bit off the topic, but there's not really nothing going as far as price right now. There's not really nothing going on that's too extravagant. NASDAQ's, setting up this 5-minute 20 SMA play here. I don't know if anyone is in that or not. The range of this candle is 8 points, right? So think about it. You're in lunch hour. The range is 8 points. So you're looking for 8 points or 4 points. Take your pick, right? If you look at the high price, 18,211 shot up to 18,217. Went up 6 points. Not a lot. Not a lot. And it's in the middle of the range between the high of day and the low of day, right? So if you start looking at where we at, we're about in the middle of the range. So we could be trading up towards the upper range and then pulling back. We could be putting in a lower high, right? If this is a high, lower high, pull back, right? Not a whole lot. Not a whole lot. So food for thought. If you were in this 20 SMA play and it went up 6 points, you took no profits, it's coming back, you got one of two options. Your stop loss is 18,203 or your stop loss is 18,200, 5-day moving average. Take your pick. Close below that, you can just get out of the trade. Take your medicine, that's it, right? You get 8 points on it. If it does pop back up, 10 points, take your cash, right? Take your cash. I tend to personally avoid lunch hour between 9 and 10 a.m. I tend to avoid that. But it is what it is. And again, like I want to make a point though. If this comes down and closes below the 5 and you get stopped out, this should not kill your day's P&L. Like this should not kill an account. You know, losing 10, 12 points. I mean, for every one micro, we're talking about losing, let's call it $25 or less. Most anyone should be losing on this $50, $70, $80. That's a fucking cup of coffee trade. Like that's not going to get me upset. That's just low risk trade there, potential high reward. We should still be in this trade. If you are in it, again, let it play out, right? Just let it play out. There's nothing, you can't control the stock. You can't control the price. So why get upset about it if it doesn't work? So many times I see people getting upset that their trade doesn't work out. There's nothing to be upset about. It is what it is. Look at this, thing's bouncing back. For all we know, it could go up 30 points. If it doesn't, okay, well, we take the loss. Another one. Guys, I do got to get off though. I have some arrangements that I had to go to, some funeral services for a friend, family member of mine. But I'm going to get off, and if you guys have any questions, I'll be around maybe in a couple of hours when I get back. Stay green. Stay under control. Control your position sizing. Again, any questions, we could talk about them in the futures channel. Post them, this, that, and the other. It's all good. But stay safe, guys. I'll catch you guys in a little bit.